Welcome back. In the last chapter, we explored the fascinating history of payments, from barter systems to digital currencies. Today, we're shifting gears to look at the intricate web of players that make up the payment ecosystem. Whenever you buy something, whether online or in-store, multiple entities work behind the scenes to ensure your transaction goes smoothly. This ecosystem is highly interconnected, with each player performing a specific role to make payments fast, secure, and reliable. By the end of this chapter, you'll have a clear understanding of the key players in the payment ecosystem, their roles, and how they interact with each other. Let's start by defining what we mean by the payment ecosystem. What is the payment ecosystem? The payment ecosystem refers to the network of entities that work together to enable financial transactions. These include banks, card networks, payment processors, merchants, and consumers. Think of it as a team where each player has a specific role, but they all share the same goal: to facilitate the seamless transfer of money between payer and payee. This ecosystem is vast and complex, but for simplicity, we can divide the key players into 6 main categories: consumers, payers; merchants, payees; issuing banks; acquiring banks; payment processors and gateways; card networks. Let's dive into each category in detail. 1. Consumers, payers. Consumers, also known as payers, are the starting point of any payment transaction. They are the individuals or entities purchasing goods or services. Role in the ecosystem: initiate payments using a variety of methods such as cash, credit cards, mobile wallets, or bank transfers. Interact with payment terminals or online checkout systems to complete transactions. Key expectations: consumers expect payments to be fast. No one wants to wait in line while a card is being processed. Convenient. Options like contactless payments and one-click checkouts enhance the consumer experience. Secure. Consumers want assurance that their personal and financial information is protected. Trends impacting consumers: the rise of mobile payments and digital wallets like Apple Pay and Google Pay, growing interest in buy now, pay later (BNPL) services, increasing awareness of payment security and fraud prevention. 2. Merchants, payees. Merchants are the businesses or individuals selling goods or services. They are the recipients of the payment in a transaction. Role in the ecosystem: provide the goods or services in exchange for payment. Use payment systems like point of sale, POS terminals, or online payment gateways to accept payments. Work with acquiring banks and payment processors to receive funds. Key expectations: merchants need payment systems to be reliable. Downtime or failed transactions can hurt sales and customer satisfaction. Minimize costs. Interchange fees and processing charges can eat into profits. Prevent fraud. Merchants want tools to identify and prevent fraudulent transactions. Trends impacting merchants: the shift towards omni-channel payments, where merchants accept payments across multiple platforms such as in-store, online, and mobile. Adoption of advanced analytics to understand customer payment behaviors. Integration of loyalty programs with payment systems. 3. Issuing banks. Issuing banks, or simply issuers, are the financial institutions that provide consumers with payment instruments such as credit cards, debit cards, or prepaid cards. Role in the ecosystem: issue cards that consumers use to make payments. Approve or decline transactions based on the cardholder's account balance or credit limit. Handle the consumer's repayment for credit card purchases. Key responsibilities: customer verification. Ensure the cardholder's identity and account validity. Authorization. Approve or reject payment requests based on account status. Risk management. Monitor transactions for potential fraud or abuse. Revenue model. Issuing banks earn money through interest fees, charged on credit card balances not paid in full. Interchange fees, a percentage of each transaction paid by merchants. Annual fees, charged to cardholders for premium cards or services. Trends impacting issuers: the rise of digital-first banks that issue virtual cards instead of physical ones. Increased focus on building cardholder loyalty through rewards and benefits. Advancements in fraud detection and prevention technologies. 4. Acquiring banks. Acquiring banks or acquirers are the financial institutions that work with merchants to process payments. They act as intermediaries, ensuring that funds are transferred from the consumer's bank to the merchant's account. Role in the ecosystem. Provide merchants with access to payment systems such as POS terminals and online payment gateways. Facilitate the settlement of funds into the merchant's account. Handle chargebacks and disputes on behalf of merchants. Key responsibilities. Onboarding merchants. Assess the merchant's risk profile and set up accounts. Transaction processing. Ensure payments are routed correctly through the system. Compliance. Help merchants adhere to regulations like PCI DSS. Revenue model. Acquirers earn money through merchant discount rate, MDR, a fee charged to merchants for each transaction. Additional services providing analytics, fraud prevention, and customer support. Trends impacting acquirers. Growing demand for faster settlement times. The shift towards integrated payment platforms that combine acquiring services with other business tools. Increasing competition from fintechs offering low-cost acquiring solutions. 5. Payment processors and gateways. Payment processors and gateways handle the technical aspects of moving payment information between the consumer, merchant, issuing bank, and acquiring bank. Role in the ecosystem. Payment processors manage the flow of payment data, ensuring that transactions are authorized and settled correctly. Payment gateways provide the technology that connects a merchant's website or POS system to the payment processor. Key responsibilities. Ensure the secure transmission of payment data. Facilitate communication between the merchant and the banking network. Provide fraud detection tools to identify suspicious transactions. Revenue model. Payment processors and gateways earn money through transaction fees, a small fee charged for each transaction they handle. Monthly fees for access to their technology and services. Trends impacting payment processors and gateways. The adoption of cloud-based processing systems for greater scalability. Increasing use of AI to optimize transaction routing and reduce processing times. The integration of payment gateways with broader business management tools. 6. Card networks. Card networks like Visa, MasterCard, American Express, and Discover provide the infrastructure that allows payments to be routed between issuers, acquirers, and merchants. Role in the ecosystem. Facilitate communication between issuing banks and acquiring banks. Set rules and standards for transactions, such as interchange fees and fraud prevention protocols. Provide branding and marketing support to card issuers and merchants. Key responsibilities. Ensure global interoperability of payment systems. Handle disputes and chargebacks according to standardized rules. Innovate new payment technologies, such as contactless payments. Revenue model. Card networks earn money through interchange fees, a portion of the fee paid by merchants for accepting card payments. Licensing fees charged to banks for issuing branded cards. Trends impacting card networks. Competition from emerging payment methods like cryptocurrencies and real-time payment systems. Partnerships with fintechs to expand into digital wallets and BNPL services. Increasing focus on sustainability, with some networks offering eco-friendly card programs. How these players interact. Let's bring this all together with a real-world example. Imagine you're buying a new phone online. Here's what happens behind the scenes. Consumer. You enter your credit card details on the merchant's website. Merchant. The website sends your payment details to a payment gateway. Payment gateway. It securely transmits the details to a payment processor, which routes the transaction to your issuing bank. Issuing bank. Your bank checks your account balance and approves the transaction. Card network. The card network ensures the transaction follows its rules and standards. Acquiring bank. The merchant's acquiring bank receives the funds and deposits them into the merchant's account. All of this happens in just a few seconds, thanks to the seamless coordination of the players in the ecosystem. Challenges and opportunities. The payment ecosystem is constantly evolving. As consumer preferences change and new technologies emerge, each player faces unique challenges and opportunities. Challenges. Fraud and security. Protecting payment data is an ongoing battle for all players. Regulation. Adhering to complex and evolving regulatory requirements can be burdensome. Competition. New entrants like fintechs and big tech companies are disrupting traditional roles. Opportunities. Innovation. Technologies like AI, blockchain, and real-time payments offer new ways to improve efficiency and security. Collaboration. Partnerships between traditional players and fintechs can create new value for consumers and merchants. Global expansion. Emerging markets offer untapped opportunities for growth. Conclusion and preview. The payment ecosystem is a well-oiled machine, with each player performing a critical role to ensure transactions are seamless, secure, and reliable. Understanding these roles is essential for anyone entering the payments industry. In the next chapter, we'll take a closer look at the evolution of payment instruments, from cash to digital wallets. You'll learn how consumer preferences and technological advancements have shaped the tools we use to pay.